Welcome back to one more video, and this video is after you have finished all of it, meaning journal, all its subsidiaries, ledger and trial balance, because this is the process we are following. We record all transactions here, we analyze them by posting into various ledger accounts, and then we sum it up in the trial balance. It's a summary of all ledger account balances all in one place, yes, in a sheet, and from there it becomes very easy to prepare the final accounts of the business. Final accounts meaning at the end of the year, totaling up things, finding out profit, loss, the financial position of the business, the scorecard of the business, how has it done during this year and till date. Alright, so here we are starting off with very interesting final accounts. Final accounts can be broken up as trading account, profit and loss account and balance sheet. Trading and profit and loss account are basically the same account but two different parts, you can say. Okay, because here trading account, when we are talking about, we are only focusing on the direct expenses and direct income, meaning the very basic core expenses and income which are the basic trading activity of the company or the business. Sole proprietorship we are talking about, right? The business. So here we are seeing incomes. What is the most direct and obvious income? Which is sales and services provided for the by the organization, isn't it? Sales is the basic income, and related to sales, what are the direct expenses? We can talk about purchases, wages, etc. Yes? Wages for manufacturing goods. All factory related expenses will be direct expenses. If we compare that, the direct expense, direct incomes, we get gross profit or gross loss, and we call it gross because it is just only the direct income and expense. There are other incomes and expenses also. We are not taking the whole of it here in trading account. Okay, that's why it's the gross effect. Net profit and loss is the overall profit and loss which we will arrive again. This is gross profit. After that, there are certain indirect expenses, meaning not directly related to manufacturing. Okay, indirect expenses like office expenses, selling, distribution, expenses, depreciation, all those financial costs and all. Those are indirect expenses, and there are indirect incomes also, like you have received rent, commission, there is a profit on sale of investments, something like that. All those are indirect incomes for you. When we take this also, meaning we take all expenses and all incomes, then we arrive at the net profit or loss, net loss. Alright, so this is the net result for this year, only this year, because income and expenses are related to one particular year. Fine? Chapter close here. Now if there is a profit or there is a loss, it will affect the capital. If there is a profit, your capital increases. If there is a loss, your capital decreases. Isn't it? Right. We are trying to find here now what is the financial position of the business. Financial position meaning over the years, meaning 4, 5, 6, 7 years, whatever has been the organization has been doing business, based on that, how much are the assets and liabilities of the business. Assets and liabilities are not built over 1 year only. Okay, it takes a lot of time, number of years that the business has been working for. So here this shows the financial position of the business on a given date at the end of the year, and this was the financial performance of the firm during one particular year. There is a difference between financial performance and financial position. Correct? So this is what is the basic framework of the final accounts. We will go very slow, very small parts we will take. So we will take just the trading account in the first place. Then we will move to profit and loss account and then balance sheet, and then we will do sums where we have everything. Okay, it's real fun, children. Ask people who have already done this the sook of a tallied balance sheet. Okay, so you are about to experience that. So let us go and start. So did you have a look at the format of the trading account? Yes, the first account in the final accounts whole set, whole scenario. Okay, this is the first step, preliminary. What are we trying to do here? Trial balance is showing me all the figures, all incomes, all expenses, all assets, all liabilities, right? It's very simple for me. From there I pick and choose only the direct expenses, put it in the debit of trading account. I pick up the direct income, like there is sales, I put it in the credit side of the trading account. Income minus expense. Income here, expense here. The difference will give me profit or loss depending on whichever is more. Income ज़्यादा है, profit होगा, expense ज़्यादा है, loss होगा, right? We'll come to that later. So all we have to do is we need to understand what all items will be going to trading and what to profit and loss account. Okay. One thing is clear, only income and expenses can come here, nothing else. Assets and liabilities will never find any place in trading or profit and loss account. Because income and expenditure has got nothing to do with assets and liabilities, right? Profit is the difference between income and expense. Asset and liability is nowhere in picture. So, let us see, suppose if these are the few items which are appearing in the trial balance. Purchase 5 lakhs. Purchase is an expense. So I told you this trading account, see this is just a ledger account, it's a nominal account because we are trying to find out profit by comparing income and expenditure. So trading account and profit and loss account are nominal accounts. Okay. Debit side, credit side, just like any other ledger account. We write here for the year ending because this is for a particular year. We are trying to find profit for a particular year, 31st March 2018 say. Purchases expense hai. I said I will put all my expenses here. So purchase account is showing a debit balance. Obviously all expenses will show a debit balance. There is no question about it. If this is a debit balance, total year's purchase, I need to close all the incomes and expenditure by transferring it to trading account or profit and loss account. Direct है तो trading account में डालकर close करेंगे, indirect है तो profit and loss account. So here, purchases account is to be credited in order to close it. So I am crediting purchases account. Okay. What is the closing entry for this? It's journal entry, right? These are called closing journal entries. Fine. Closing entries. Meaning we are closing the particular income or expenditure account by transferring to either trading account or profit and loss account. Closing entry purchases है डाल देते हैं, but purchases is 5 lakhs, but we can also see purchases return. Meaning out of 5 lakhs worth of goods that I have purchased, I have returned goods worth 10,000. So how come my expense was still 5 lakhs? It has to be adjusted, right? So we have certain next set of entries which are called transfer entries, meaning related accounts, purchase or purchase return. By purchase return, the purchase account balance should come down. How will it come down? If we pass this closing entry, purchase return is always having a credit balance. So we debit it with 10,000. So ये purchase return account will be closed. And we credit purchases account with 10,000. So purchases account I am crediting a debit balance account which I am crediting. Expenses will go down. We credit an expense, the expense goes down. So here we put it as 5 lakhs minus returns 10,000. Therefore, my net expense on purchase is 4,90,000. Net purchases is 4,90,000. Okay? So purchases expense has been debited. This is the effect of that closing entry. If you are asked to pass the closing entry, you will show. Otherwise, we can show it here itself as a working here. This means that this is the effect of the journal entry. But again, journal entry also you should understand कि ऐसे कैसे हुआ, यहीं पे थोड़ी minus हो जाएगा. These are accounts opened in the ledger. So how are they closed? They are closed like that. Okay. Purchases return will be debited and purchase account will be credited. So that is a transfer entry. Okay. Okay. Similarly, sales and sales return, related accounts, we will have a transfer entry for that also. Sales I should debit because with the amount of returns, sales का income कम हो गया. So return, sales return, and I close sales return by crediting sales return account. Alright. So sales return account is credited and sales is debited. So we have brought down the amount of income. Income should come on the credit side. Obviously, how do I close sales now? Then what was the closing entry for purchase? What did I do? After I adjusted this purchases account I have debited to trading account. Yes, 2 purchases. This is the closing entry I passed. Trading account I have debited, so it is appearing on the debit side. What did I credit? Purchase. How much? Are you getting it? So this is how from the journal only we are getting here. Then how do we close sales? Sales is still having a credit balance debited to trading account. Done. So sales debit to trading. So to trading meaning on the credit side by sales. How much? 7,50,000 less returns. Yes, return inverse 20,000. So basically we have made sales of only 7,30,000 net sales. Are you getting it? So income here, expense here. We are trying to find out the difference now. We have other income, other expenses also. Wages. Wages are direct expenses because they are paid to the daily wage earners, daily laborers who contribute to the manufacturing of goods. So this is a very much a direct expense. So to wages account, okay, this is the closing entry again for wages. What is the closing entry? Trading account debit to wages. Isn't it? I have closed an expense account. All expenses are debit balance. We credit it, it gets closed. And we are transferring each and every direct expense like this. Similarly, carriage. But we put only carriage inward here, not outward. Because carriage outward is paid on goods sold. We are not taking selling expenses here. We are taking all the expenses related to acquiring, processing, manufacturing and getting the goods ready for sale. Therefore, carriage inward is 1,000. So I close it. Again, what is the closing entry? Trading account debit to carriage inward. Alright. And if these are the only items here, my total here is 7,30,000. If I have to make it equal, I can already see that this side is falling short. There will be a balancing figure here. So how much is this? 4,90,000 plus 51. Correct? So 1,000. 5,41,000 is the total of this. I subtract this from 7,30,000. Right? 1,89,000 is the balancing figure. This side is falling short. So to make it equal and close the account, I have to put this figure here. What is this? What is this 1,89,000? It is the difference between the direct income and direct expenses. This is my gross profit. Alright? But I do not write here to gross profit because gross profit is no account. I am transferring this to profit and loss account. You can write in bracket gross profit carried forward, meaning this is my gross profit. Okay, after this I also have certain indirect income. वो भी add होगा. We have certain indirect expenses, we subtract that and then we'll arrive at the net profit. This is step 1. Trading account is step 1. So this, whatever is the result here, I transfer that to the profit and loss account, which is the next segment in our final accounts. Alright. So we will take a small sum on this so that you are clear with how to go about it. We will also discuss what to do with the closing stock. Alright. So see the sum. Okay, so you've seen the sum. The sum says prepare a trading account from the following particulars. You have been given certain list of income and expenses, and at the end of it, it's also given closing stock is valued at 6 lakhs. Okay, in the previous videos, we have done trial balance, and trial balance we have come to know about the concept of cost of goods sold. Cost of goods sold, if you remember, opening stock plus purchases plus direct expenses minus closing stock, right? And of course, purchase, here we take the net purchases. Now, that entire thing you will see here, and then its comparison and how to find out gross profit. Now let us put these opening stock. Opening stock. This all these figures are you can get it from the trial balance. Okay, whatever figures are given here, because these are the year-ending ledger account balances. Okay. Opening stock is showing 2,50,000. So we would have used this, we would have sold this during this year. So it is an expense of this year. I transfer, I close it by debiting trading account. Opening stock is 2,50,000. Then we had purchases. Okay. Purchases will usually have return. If there are purchases return, yes. We have purchase return, then you write less returns. Return outward or purchase return, okay? Purchases is given as 7 lakhs. Purchase return is given as 22,000, okay? So this is 78,000. 6 lakhs, 78,000. I'm subtracting this, right? Then we have sales. Sales is an income. I should put it here. We also have sales return, so I put it in the inner column so that the effect of that transfer entry I can do it here itself without showing the journal entry. 18 lakhs less returns 36,000. 17 lakhs 64,000. Correct? Then wages. Now you just have to think here, whatever is given in the sum. It is not mandatory that everything will come here. If it is a direct expense, only then we will put it here. Wages, we just discussed, yes, it is related to manufacturing. So we will put it here, 2,06,000. Carriage inward, very much. Carriage inward, without paying this, I will not be able to get the goods here. Forget about manufacturing, isn't it? Carriage outward is 20,000. Carriage outward is paid on goods sold. It should not come here. Here we are just talking कि कितना expense हुआ है just to get the goods ready to be sold. That's it. Ready to be sold. That's it. Nothing beyond that. When will you pay carriage? After they have left your premises, isn't it? All those expenses are not required here. So here, manufacturing expenses. Okay, what do you think? Yes, manufacturing expenses. The name itself suggests that related to manufacturing, part of your direct expenses. Correct? 2,48,000. Then, purchase return and sales return we have taken. Gas, fuel and power. Gas, fuel and power is always related to manufacturing, your plant related, isn't it? So, gas, fuel, power is how much? 75,000. Debited to trading. These are all closed. See, all these expenses account are being closed here. What is the journal entry? Trading account debit, 2 wages, 2 carriage inward, 2 manufacturing expense, 2 gas, fuel and power. We are all debiting this to the trading account. All expenses. Factory lighting, dock charges first. Dock charges. Now what are dock charges? Dock charges are paid for goods that are imported. Alright? Yes, you know the docks, right? So here imported or receiving through the waters basically. So you have your customs, your dock charges, all those handling expenses that you have to pay for goods that are being brought in. Now it's not said, this is for sales. So we are taking it as on goods purchased. So dock charges are the clearing charges you are paying for getting the goods into your business. Very much a part of direct expense. Factory lighting. The name itself suggests it is related to factory. Very much an expense, direct expense. But office lighting is for the office, administrative work. That is not a part of direct expense. Okay? Factory, manufacturing, plant related, works related expenses all come here. Office related expenses we put in profit and loss account. They are indirect expenses. Alright? Because we cannot trace exactly how much of that office expenses can be traced to these goods. There is no direct link up here. But whatever we are putting here is directly related to the goods. So these are all direct expenses. Alright? Now, after we have put this, closing stock is given as 6 lakhs. Closing stock is what is left from my this year's purchase or manufacture, right? So 2,50,000 and this is the total value of goods I had. Out of this I am still unable to sell. This I have sold, but I am unable to sell 6 lakhs. Therefore, here I put closing stock 6 lakhs. 6 lakhs, isn't it? Yes. What is the closing entry for this? Trading, closing stock है, we are crediting trading account. Closing stock account debit to trading account. Now, for your information, closing stock is always valued after the trial balance is prepared, books are closed, physical counting is done, and we value the goods at cost or market value, whichever is lesser. That's the rule, conservative principle. You discussed that in trial balance, right? So here we are talking about bringing into picture this closing stock account. This account is there, and we are crediting our trading account because this should reduce the cost of this year. खरीद लिया लेकिन बेचा तो नहीं. When will we sell it? Next year. So I should match this closing stock with the incomes of next year. When this becomes next year opening stock. This opening stock was closing stock last year, isn't it? Let us become opening stock at the beginning of the year. So ये हो गया मेरा opening stock, this year's expense. But this is not this year's expense, not related to this year, because this I will sell in the next year. This is my current asset till now. Till the time I sell it off and get money. So I have subtracted that from basically purchases, if you can see that. That's the closing entry for that. Now we have put all incomes here. Sales and closing stock is there. Closing stock is not an income, but we have put the figure there. Now we'll try to close it. We'll total it up. This is 17 lakh 64,000 and this is 6 lakhs. Okay? Yeah, 64,000, 54,000. Then we have 6. Okay. We have 23 lakh 64,000. And from this we subtract all of this. And my gross profit should be 7 lakh 69,000. So this we transfer to profit and loss account. This is what? Gross profit carried down. Alright? We are transferring this profit, the gross profit, this is gross profit, income minus expenses. Right? So this is what is meant by gross profit. Meaning, we've just taken the direct expenses out of my income, which is my sales. Alright? So this shows your profitability related to simply the manufacturing unit or the core trading process of the business. Apart from that, the management expenses we are not taking right now. Okay? That we take where? In the profit and loss account, which is the next segment of your final accounts. Right? Before we move on to that, of course, we have A lot of more things to learn about trading account, which we will do in our next video. Till then, practice such simple sums where you simply have to post things. Please go through thoroughly with the format of the trading account, which will give you almost all types of entries that will be found there in a trading account. Is that okay? So take care, children. Have a wonderful day. Bye bye.